Welcome back to Explain the Charts, everyone. Today, September 24th, 2025, we are tackling the dramatic recent movements in BTCUSD, which has captured headlines and shaken the crypto market. According to breaking news, Bitcoin recently plunged below $112,000, with Yahoo Finance reporting it trading around $112,660 just yesterday. This sharp downturn triggered over $1.7 billion in liquidations, predominantly impacting long positions, as the broader crypto market shed $200 billion since Friday, as highlighted by Forbes. Compounding this pressure are anticipations of over $517 million in token unlocks within the next week, sparking fears of increased supply and further selling pressure. Broader macro uncertainty, coupled with cautious remarks from Fed Chair Jerome Powell despite a recent 25 basis point interest rate cut, has also tempered market expectations and contributed to the stalled performance. These factors collectively paint a picture of a market under significant stress, testing key psychological and technical support levels. Now, let's look at the daily chart to place these recent events in a broader context. We can see a strong rally emerging in late 2024, carrying into early 2025, with Bitcoin reaching significant highs well above the $100,000 mark. Notice the impressive surges in November 2024, pushing Bitcoin past $80,000 and then $90,000, showing sustained bullish momentum. The peak around $108,000 in December 2024 and another run towards $112,000 to $117,000 in January 2025 demonstrate Bitcoin's prior strength and ability to recover from pullbacks. However, we also observe significant corrections, such as the sharp drop in early February 2025 from over $100,000 down to the $80,000 range, marked by heavy volume, before finding a new base. These historical patterns underscore Bitcoin's inherent volatility, where rapid gains can be followed by equally swift corrections. Zooming into the daily chart for the past few months, specifically from May 2025 onwards, we can clearly identify the build-up to the recent market turbulence. Bitcoin had a strong run from roughly $95,000 in early May, pushing steadily towards and above $110,000 by late May, and even touching highs near $120,000 in July. This upward channel was then broken in August, as the price experienced some consolidation and started to show signs of weakness. The most recent candles, particularly from September 22nd and 23rd, distinctly show Bitcoin closing around the $112,000 level, confirming the news of it breaking down from critical support. Forbes also noted Bitcoin broke through support near $115,000 and fell sharply below its 50-day moving average, a bearish technical signal clearly visible in this time frame. Let's switch to the 1-hour chart to analyze the immediate impact of the recent sell-off and the intensity of the price drop around the $112,000 mark. Looking at the candles from the past few days, particularly on September 22nd, we see rapid downward movements, reflecting the $200 billion market wipeout and extensive liquidations reported. The candles show a strong bearish presence, with significant selling volume pushing prices down quickly. The cluster of activity around the $112,000 to $113,000 region demonstrates the ongoing battle between buyers attempting to defend this crucial support and sellers pushing for lower levels. This sustained pressure indicates that many traders were caught off guard, leading to the cascading liquidations. Moving to the 15-minute chart, we can gain an even more granular perspective on Bitcoin's struggle around the $112,000 price level over the last 24 to 48 hours, right up to the end of September 23rd. We observe persistent selling pressure and consolidation attempts, with price hovering just above or around this critical support. Notice the relatively thin volume on some of the recovery attempts, suggesting that buying conviction is currently weak. The immediate price action shows Bitcoin is struggling to gain upward momentum, forming tight ranges that indicate indecision. To confirm a potential reversal, we would need to see a clear breakout above these short-term resistance levels, accompanied by a noticeable increase in buying volume. Until then, the immediate outlook on this shorter time frame suggests continued caution. Now, let's weigh the bullish and bearish arguments influencing BTCUSD in the current environment, returning to our daily chart for perspective. On the bearish side, the recent crash, large-scale liquidations, and looming token unlocks certainly create a gloomy short-term outlook. Macroeconomic uncertainty, including concerns about the US dollar and cautious Fed statements, continue to exert downward pressure on risk assets like Bitcoin. However, there are strong bullish counterpoints. Despite the sell-off, U.S. Bitcoin spot ETFs saw $163 million in inflows, demonstrating persistent institutional demand. Major players like Metaplanet continue to accumulate BTC, having recently bought an additional $632 million, and Michael Saylor hinted at further purchases, indicating by the dip strategies from whales. Furthermore, the SEC's approval of generic listing standards for new crypto ETFs, although not directly for Bitcoin, signals growing regulatory acceptance that could open the floodgates for broader institutional adoption in the long term. Long-term predictions remain highly optimistic, with figures like Bitwise CIO Matt Hogan projecting Bitcoin could reach over $1 million by 2035, driven by Wall Street's increasing embrace of crypto. The trend of Bitcoin leaving exchanges, nearing cycle highs, also suggests that large holders are confident in future price appreciation and are moving their assets into cold storage, reducing immediate selling pressure. To recap our analysis, BTCUSD is currently navigating a critical period, with immediate support around the $111,500 to $112,000 zone. A failure to hold this level could see Bitcoin testing further supports at $108,000, with the strong psychological level of $100,000 acting as the next major defense. A scenario with moderate high likelihood if macro conditions worsen or liquidations continue. Conversely, if buyers step in decisively and broader market sentiment improves, reclaiming $117,000 would be a key reversal signal, potentially paving the way for a retest of $120,000 to $123,000 resistance, a moderate likelihood contingent on sustained ETF inflows and positive news catalysts. For short-term traders, closely monitor volume on bounces. Weak volume could indicate false recoveries. Long-term investors should pay attention to ongoing institutional adoption trends, particularly ETF inflow data and corporate treasury announcements like those from Metaplanet and MicroStrategy. Keep an eye on global economic data, any further Fed policy shifts, and significant token unlock schedules, as these events can trigger rapid price movements. The overall sentiment remains cautiously optimistic for the long term, but short-term volatility is likely to persist as the market digests these recent developments.